When I saw the Wall Street Journal headline that Jeff Bezos is investing in a business to challenge Google, it got my interest, especially because it's not only Jeff Bezos. You have some insiders, former insiders at Google that have gone on and invested in this competitor. This includes Susan Waj, I don't know how to pronounce your last name, who's the former YouTube CEO, as well as Jeff Dean, who was running one of the, or who was a senior VP of AI research. So clearly high roles within Google. And to see them saying, hey, we're jumping ship in terms of our capital, putting it into this startup because we think this opportunity to disrupt Google's legacy search business is so big, that gets me interested to understand what's going on. I do own a little bit of Google stock, but when I see this type of development, I want to understand, okay, what's the risk for me to consider? And so what is the company in question? First, my name is Daniel. You're watching Unrivaled Investing. If you enjoy educational investment videos, please make a point of hitting that thumbs up, hit that subscribe button. The company in question is called Perplexity. And so this is a private company. You go to their website, to check it out. The very first thing they talk about, our mission continues, announcing our Series B funding. This is what the Wall Street Journal was reporting on, where Jeff Bezos, NVIDIA, Toby Lutke. I mean, these are some heavy hitters along with some venture capital firms, including their Series A investors, which included Elad Gil and Databricks. They've invested, this Series B is a $74 million. Previous Series A looks like it was, around $25 million ballpark figure. So we've now raised $100 million to date. I mean, this is just incredible that there's a lot of capital starting to flow in to this business, Perplexity. Now, what's their value proposition? What they talk about is we offer, it's a search tool offering complete sources and citations included. There's no need to click on different links, endlessly dig for information. So if you're talking about Google and search engine optimization spam, sponsored links, and multiple web pages, this will be replaced by a much more efficient way to consume and share information. So really the concept of the Google search, and you're going to get these 10 links, and some of them are going to be advertising based, that whole model is going to get disrupted. And so then the question is, well, how much of Google is that legacy bread and butter? And, how fast does that get disrupted? What does that mean for Google? So once again, using Perplexity to answer this question, what percentage of search is Alphabet's current revenue? It quickly pulls up the answer. I'm impressed with how fast Perplexity runs, and they do have a very smooth system pulling in based on different AI models. I believe they're currently powered by OpenAI's ChatGPT, but you can see that it pulls, the different links, and it shows, in 2022, Alphabet generated $283 billion of revenue, and, Google search and other was $162 billion. So that's about 57% of Alphabet's total revenue. So 57% of Alphabet's revenue is Google search and other. So what's that other? What's the search and other? Once again, using Perplexity, it actually worked really well, saying, it's not just their search properties, but things like Gmail, Maps, and Google Play, and the App Store. Personally, I use AI Ticker Chat, where if I wanted to dive deeper, I can chat with the individual document, like the 10Q, to make sure, hey, I want to make sure this is right. But so far, this is quite good looking at Perplexity. And then you could do additional stuff like, hey, could you plan a trip to San Diego? Once again, I'm quite impressed because it not only, understands the question, but it knows that it should ask you some follow-up questions like, okay, what do you want to see? What's the purpose of your trip? And, based on these questions, very snappy website, it does give you this output where, day one, day two, Ben Graham, one of the founders of value investing, used to live in La Jolla, which is one of the neighborhoods in San Diego. So, it gets my interest. How is this business model working? Because so far it's ad-free. Well, it's this sort of, this freemium model. So it's ad-free to use it, but they also recommend, going pro if you want to get access to, different models, unlimited Copilot queries, currently over 300 daily queries with our interactive research assistant, their Copilot. They talk about API credits, and it's $20 a month, $200 yearly for this. So it's interesting, be able to upload data, to be able to ask questions about it. Really, I look at it and it's just so clear that there's a race here to develop Like, how do you get the eyeballs for search? Because it's very clear a lot of this stuff that they're talking about, you see OpenAI doing it with their own existing ChatGPT. So it's, you know, it's so early days, but it's very interesting to see, you know, this money flowing in. Does this mean the death of Google? Well, first of all, in full disclosure, this is not financial advice. I do own a small stake in Google. And also, a quick plug, take charge of your investment journey with unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and in our exclusive Discord server, available for premium annual subscribers. Once again, that's at unrivaledinvesting.com. When I look at Perplexity and what they've accomplished so far Perplexity is growing at hyper speed, from 2 million visits last year to 53 million in November. Now they have 10 million monthly active users, along with around $5 to $10 million in sales. So they're getting scale. They're not at scale yet, but they're growing quite quickly, which is interesting to see. But once again, let's put it in context using Perplexity again. And Google is just a behemoth. I mean, that's a laughable figure from Perplexity relative to Google. I mean, Google, you're talking about 8.5 billion searches daily. You're talking about billions of users daily across their different products. So the reality is this is still very early days. Google still has 92% global search engine market share. But when I look at 92% market share and I think about the capital that's coming in and I think about these competitors, it does make me think, that's, you're not going from 92 to 100%. If anything, that's going from 92 to what's the new figure. So once again, I go to AI Ticker Chat to start thinking about, what is the threat and what is the opportunity for AI as it represents to Google. And I want to understand in the words of management at Google. It's one thing for me to extrapolate. I want to see, because now with AI Ticker Chat, we not only have earnings calls, but we can also pull in from exclusive investor presentations. And so we're looking at both earnings calls and investor presentations in the past year to understand in management's own words, what do they think about AI, whether or not it's an opportunity or a risk? And, on the opportunity side, they do make the point that, look, with AI, their ad targeting could actually be even better. Better user engagement, higher ad revenue, which is an interesting perspective to see. Other aspects is you're going to have revolutionary products. And this is part of the reason why I do own Google, is not only do you have this legacy search business, but they're investing in things that are huge potential markets, like autonomous driving with Waymo, Google Assistant. That's already been, put into a lot of homes. If you roll in their Google Gemini, maybe that, is really incredible for a lot of households. They also have, their cloud platform. So there's a lot of coals in the fire. They also have YouTube. I'd argue YouTube is an unrivaled platform. There's no one else really like them. Another reason why I personally own Google. But on the flip side, once again, this is using AI Ticker Chat to ask management effectively, based on what management has said, can you size up whether or not it's a threat or opportunity? It also talks about the threats, and this brings up competition, where that 92% market share, you're not going to be able to keep that. And then there's also the public perception. Societal norms might change. People might say, you know what, I don't need to do a Google search. And that I'd argue is a big risk, is that if people start saying, oh, I'm going to use this AI platform first because that's what I'm used to, or that's what I think is more efficient, you could see that change. So I really do like this conclusion here that AI is a double-edged sword for Alphabet. I think that's very accurate when we think about it. You're looking at a business where there's a lot of change. There's a lot of uncertainty about what the future cost looks like, what their future market share looks like. And, I call this out, over my shoulder, this book called Capital Returns. I think it's super important because the reason why capital returns, and one of the models that I like from it, is this framework that when you see capital leaving an industry, meaning people are saying, this is just too hard, the returns aren't great, and the capital pulls out of the industry, that means you're not going to get a lot more competition. So that means the remaining players can crush it. Or you have an industry where it's just so hard, you don't even have capital go in. So I look at that, and, I previously did a video on Monish Pabrai, and he bought this coal stocks, and a lot of coal stocks have absolutely ripped higher. partly because of this dynamic is that capital has fled the space because people said, hey, I don't want to own it. I don't want to own it. And, there's not going to be any competition, any new expansion. And then you get beneficial pricing, and then your margins and profitability just explode. Look at the exact inverse, I'd say. The exact opposite is what Google faces right now with Google search, which is that, so Google search and other represents 50-60% of their revenue. Maybe their pure search business, maybe guesstimate between 30 and 50%. Guess. That business is likely going to get chipped away in the years ahead as consumer behavior changes. Now, that doesn't mean it's going to be the death for Google, and that's super important to understand. I raise it as a question. Does this pose the death? Because clearly Jeff Bezos would love to see that based on this investment in Perplexity. And keep in mind, Jeff Bezos was one of the early investors in Google, I believe. So it's an important dynamic for investors to consider. And so you look at Google now, and this is one of the, the key charts that I like looking at with companies, their free cash flow. Look at the quarterly free cash flow. This is a thing of beauty for Google. Just, steady left up and to the right. And $20 billion plus per quarter. And what are they doing investing with it? They're buying back stock. And these fundamentals are actually completely free to users at AI Ticker Chat. And you can see they're using that free cash flow to buy back a ton of stock each quarter, $15 billion a quarter. So I like to see that. And so for a company trading around 20 times free cash flow, this is an interesting development. And I'd argue its current valuation around 20 times free cash flow reflects that the market is starting to price in some of this uncertainty because the market itself trades around 20 times. So I would say this is the market saying, you have this capital return dynamic where there's more competitors, whether or not it's OpenAI, whether or not it's Perplexity, you have capital going in to disrupt their legacy business. And so there is this uncertainty of how does the free cash flow and profitability play out for Google. So that is important to understand. Running it through AI Predict, our feature that says, hey, over the next 5 years, how does the stock perform? This is once again AI Ticker Chat. Thinking about it, it gets a range based on, the historic transcripts, earnings, looking at SEC filings, and it's saying around 100% plus upside, maybe break even over the next 5 years. I personally look at it, and I'm largely aligned with this view because I actually think this view could be on the conservative side unless the business truly does start getting disrupted. See, that's the question, because here it is, it's penciling out, let's say $6 to $10 in earnings, versus a $137 stock, so $6 versus to $11 in earnings in the next few years. But if you actually, once again, check out what is Wall Street estimate, Wall Street estimates can be actually much higher. And so it's interesting that the high side of $10 plus in earnings is actually in line with the average of Wall Street. So Wall Street clearly, it's interesting. The Wall Street analysts don't see a disruption. The valuation in Google around 20 times suggests this uncertainty, certainly not a premium. Yet the analysts, the Wall Street analysts are saying, hey, we still think this earnings can effectively double over the next few years, in which case, if this happens, if this framework happens, then I think you are closer to that 100% plus upside scenario, because it would mean the business model hasn't gone disrupted. But there's a lot of uncertainty here, folks. I think it's important to watch how this plays out over time. There's legitimate risks that smart capital allocators, including Jeff Bezos, including some of the former insiders at Google, are investing in competitors like Perplexity. So I'm very curious to see how this plays out. If you have a different view, I'd absolutely love to hear it in the commentary below. Thanks so much for tuning in to Unrivaled Investing.